Hello everyone. Good afternoon to everyone. Welcome back in our webinar program of how to come up with quantitative techniques for trading. So we have Sunil with us today, and as a continuation from the last session where we discussed a broad overview of how the industry is shaping for quantitative trading, and we discussed on the general flow process of how you can come up with a trading idea, do a back testing, do paper trading, and then probably go live with it. So today in our session 2 is about how can one come up with a trading idea. And in this session, we'll also try to give you a very hands-on learning experience with the overview of how the script would probably look like and how you can make use of certain platforms like Tableau, where you can do charting, connect your Excel and stuff like that. So welcome everyone again, and welcome Sunil. Over to you, Sunil. We can probably kickstart the session.
Yeah, thanks, Salil. Thanks a lot for the introduction. So as Salil has mentioned that in the last session, we have discussed about various aspects of quantitative trading, and we have discussed various stages of quantitative trading. So in this particular session, we will focus only on the first stage of the trading, that is how to generate or how to come up with a trading idea. So I'll just give a small recap of what we have discussed in the last session. We have discussed the first stage was formulation of the idea. That covers gather and analyzing of the idea, data, and develop the hypothesis on which we will be creating the trading idea. After that, we need to verify the trading idea. It covers following steps. It covers the verification of the hypothesis on some small data set and identification of the logical pattern in the change of the price so that we can pass buy and sell orders. This activity is very important. And after that, the stage comes is back testing. Back testing is nothing but the detailed verification of the idea, what we have discussed in the previous steps. We have to list down all the rules in detail, and we have to take the larger data set so that we can cover each and every market scenario, and we can verify this on a trading strategy. After that, it comes to optimization. So optimization is the optimization of the parameters for the rules which you have written in the backtesting stage. So we have to optimize those rules and parameters of those rules so that it works seamlessly, even in different market scenarios. Next is the stage of paper trading that we all know that once we are verifying, after all the verification, we are all set to go for live trading. But we should not go for live trading just with our hard-earned money. So we should first try this on the whether and how it performs in the live market. So we should do paper trading that is without involvement of the money. So once we are done with the paper trading for some particular period of time, we can go for live trading. That is with some amount of money we can start it, and slowly gradually we can keep on increasing the money into it.
Sure. So Sunil, a lot of viewers are joining in as you're speaking. So just for the benefit of all, I'll just update on what was going on. We are discussing the general flow of quantitative trading, how it all starts with the formulation of an idea up to the stage of live trading. And in this very stage, we are gonna cover the first subtitle, which is formulation of the idea, how to generate that idea, right?
Yeah, absolutely.
Understood.
Yeah. So coming back to the first stage, which we are planning to focus in this particular session. So that is formulation of the idea. So this is very interesting topic. I like it a lot because we have to come up, it's kind of doing some new innovation, which nobody has done before. You have to do like that. So let's cover all the activities related to this stage. It has first we need to gather the data. So for in this gathering of the data activity, there are several sub activities are there. Like we need to identify the capital market segment. I mean, in which capital market segment you want to develop the strategy. For example, it could be equity market, it could be commodity, it could be crypto, forex, or something else. It all depends where are you more interested. Another thing is you need to identify the type of the data. It could be macroeconomics data. Macroeconomics is nothing but the factors which influence the national economy. For example, GDP, employment, consumption, import, export, and so on. Next comes is microeconomics data that is specific to sector and company specific, like what is the outlook of the sector, what is the import, export, and how it is going to perform in the next some time. So this is all microeconomics factors are there. Next type of data is market microsector. This most popular kind of data which everyone uses, and without that we can't create any strategy because price is there. So it covers the price, volume, bid and ask, and so on, different kind of other data which generally exchange provides to us. And now in the modern era, people uses sentiment analysis data a lot. That this kind of data like news article, which comes from the news article and Twitter sentiments, so which we can relate it to the price and see that how it can influence, how any news article or Twitter influence the price of the instrument. So this is getting used very extensively nowadays. And gathering of the data covers few more things, like identify the period, in which particular period you want to use to formulate the idea. What will be the time frequency of the idea? Let us say it could be 1 minute, 5 minutes, 1 hour, one day, something like that. Next comes is the identification of the data provider. Mean from where you want to fetch the data. This is very important. And after you gather the data, you need to analyze the data. So it covers so many other steps. You need to identify the data points. For example, let us say you want to use open, high, low, close data. This is market microsector data. In that, so that could be the data points, but that may not be the only data points. You may need to manipulate that kind of data to convert that into some format so that you will be able to analyze it better. We'll come to that into detail once we take the practical approach of this. After that, we need to identify some analysis tool. So the analysis tool, you should identify or select on the basis of your interest, your capability, how familiar you are with that analysis tool, and how capable that tool is to do the analysis. So personally, like this could be Excel, Power BI, Tableau, and so on. But my personal preference is Tableau because I like visualization a lot. So, and by visualization itself, you can infer to, you can come to so many ideas. It's easy to use, and Tableau is very easy to use, and it has some license, free of cost license is available from Tableau, that is called Tableau Public. You can download it from Tableau website and use it in your personal computer like Windows and Mac OS. It works in both of them.
So Sunil, let me ask this. So for, like, I personally use Excel a lot, and I have a lot of comfort in generating the charts on that platform. So when you talk of these data science flavored platforms like Tableau, does it really speed up the process or help us see that visual detail which might not come out in the Excel? So yes, is it some sort of a skill that we should hook on to?
Yes, certainly. If you're in the data analysis skill, or data visualization is very important. Without data visualization, you can't think of data analysis at all. And I can tell you, I assure you that if you know Excel, then you can learn Tableau in no time. I didn't read or study any material for learning Tableau. I just went into that, opened that, and just started. So I could learn it easily. So
wonderful.
I will give you a little hands-on on that. Maybe we'll spend 5 minutes how to use Tableau before we start doing the analysis.
Yep. Sounds excellent.
Yeah. So once we identify the analysis tool, we need to find out the relationship between various data points which we have found out, which we have identified. So those relationship of the data points should linked with some change in the price, so that we can pass the buy and sell orders and we can develop the strategy accordingly. Because if there is no change in the price, we can't do any buy and sell. So let's jump to the practical now. I know everyone is waiting for that. That is the most interesting part of the session. So for the interest of the time.
Sure. Just one more point. So people are asking which platform are we going to use for data visualization. So for the audience, we're going to use Tableau, and in latter part or latter half of this very video, we'll show you the same platform. So no worries on that. Yes, Sunil, we can continue with the script.
Yeah. So first thing, like we saw in the PPT, first thing we need to gather the data. So for gathering the data, I have listed down, already wrote on one script in the interest of the time, so that I can spend more time in explaining to you and making you understand instead of writing the script as of now. So I have taken the data provider as a Y-Finance. Y-Finance is an open source library. I know not many people will be having the paid subscription. For the interest of the users, I'm using this because it is free of cost. Anybody can connect easily through Python and fetch the data from here.
Sunil, can we zoom in a bit on these lines of codes?
Okay. I'm not able to zoom more. Let me check it out. Yeah, it's working. Is it visible now?
Yeah, I think it made some difference.
You want to make it a little more bigger?
If we can do that, that would be helpful.
Yeah, I will just do it right away.
I think you have to increase the size. Yeah. It's better.
Fine.
Yeah. All right.
Let's start again.
Go ahead. No.
Yeah. Like I said, that I use the Y-Finance as a data provider. It's an open source library which anyone can use, download, and anyone can use in the Python. And I have used capital market segment as equity. So I have taken some of the indices here, like Nifty 50, Nifty Bank, and India VIX. So these are the various indices I will be using to analyze that. And I have taken one more script as HDFC Bank. That is one of the biggest bank in India. So I will be using only these scripts to do the analysis as of now. So from this, so one more thing, I will be using the intraday data here. So I will be taking 15 minutes of frequency. So, but Y-Finance has some limitation of on the intraday data. It doesn't provide more than 60 days of data. So I think for now, as of in the initial stage, it is good enough for us to use 60 days of data for 15 minutes of frequency. So we'll start with that. But Y-Finance provides only open, high, low, close, and volume data to us. So that may not be sufficient for us to do the analysis. So to do some meaningful analysis and come up with some trading idea, we'll be doing some converting that into some more kind of data, like I will tell you. So I have written some function called load indicator. It has a function, it will take care of the SMA crossover functions, like SMA short, SMA long, you must be familiar with. And SMA ratio will take care of the ratio between two, so that we can see whether crossover is there or not. Similarly, I have taken if SMA ratio P1 means previous SMA ratio of the previous candle. Similarly, I have listed down SMA ratio direction. Mean if current SMA ratio is greater than previous SMA ratio, then it is uptrend as per my understanding. Otherwise, it is downtrend. And I have also defined the RSI function here. These are the couple of very popular technical indicator I'm going to use for the analysis. Along with that, I'll be using some more very basic functions like open percentage change, close percentage change, high percentage change, low percentage change, and all. Open percentage change, you can say change in the open price of the instrument with respect to the previous open price. Similarly, it goes with close percentage change, high percentage change, and so on. I have defined few more columns here, like open percentage change P1. P1 means for open percentage change of the previous candle. P2 means open percentage change of the second most candle. And open percentage change N1 is the future candle. So this is how I define the functions here. If I run this, it will just save the data in this particular file, strategy idea live. So I will run this script and we'll use this data in the Tableau and see how we can come up with some idea. So
Sunil, I just have one question. So in the upper part of the code where you define all these scripts, which are 4 of them, the HDFC Bank, India Wix, NSE, and Nifty Bank, right? So for each script, you are calculating certain other columns like SMA short, SMA long, VWAP, open percentage, the percentage for the all OHLC prices. And along with this, you also calculate the RSI parameter for the same script. So in a sense, you are creating a lot many columns for each script. And so there would be, let's say, a total of like 1920 columns for HDFC Bank, 1920 columns for NSE, and so on and so forth, right?
Yeah, you got it right, Salil. This is what we are going to do. Because we need so many different parameters to do the analysis, and we need to find out the relationship also between all of them.
Right.
So after we find out the relationship, based on that, we'll come up with some strategy. This is what is the plan.
Got it. And we are saving all this data into an Excel called strategy idea.
Strategy idea that we'll be using in Tableau for more analysis. We can do some analysis in here also. Python, but we need to write a lot of code, and the analysis part will be very limited. So once you see Tableau, you will understand why I plan to choose Tableau only.
Sure.
So I'm running the script here.
By any chance, can we see this strategy idea live Excel?
Yeah.
After the script runs.
So the data is stored in the data frame called df4. Anyway, when it will be loaded in Tableau, it will be visible there. So I will show the data to you there.
Sure.
So I'm moving to the Tableau part. So here I just opened the Tableau already. So I'll just show you how to connect with the data. The name of the file was strategy idea live. You can see it is just generated today at 4:09.
Right.
So
essentially, you are linking Tableau with the Excel that was created from the Python script.
Absolutely. And if I make changes in anything in this CSV file, it can get reflected here.
Oh, nice. So it is a seamless integration. If you do some changes in the Excel, it will automatically reflect.
We just need to refresh that. Yeah, we just need to refresh. It will load the new data again.
Okay, got it.
So like I just try to link it here. We can link it with multiple data sources, and it's just like we can add another data source and we can relate with each other. But as of now, we'll be taking care of only one file. You can see these are it is showing all the columns which is available in the CSV file. SDFC open, SDFC high, low, close, adjusted close. I will just scroll it down. So whatever we have defined, we can visit. It's all visible here. These are the columns which we have defined. And alongside,
looks nice.
yeah, alongside you can see it is showing the preview of the data also inside this. This is the date time column, and this is the data which is inside these columns.
Understood.
So this is the data part. We can visualize and verify whether the data is correctly loaded or not. After that, we can come to sheet 1. Sheet 1 is the place, these sheets are the place where you can do the visualization and do the analysis. So like I told that I will give some gist of Tableau, how to use it. I will be doing like that. So I have selected date time. If you can see date time alongside it is mentioned ABC. It is showing that data within this is kind of character or string data. So, but it is a date time column. So I need to convert that into data type to date time. It's converted. See, it's very easy to do that. I moved the column here. It converted it automatically into year, but I will change it back to exact date. Now I have to plot something against this date time column. Let us say I want to use Nifty 50 data. NSCI close. So it has plotted, but it is not plotted properly because it is taking NSE close as the measurement. I will convert this into dimension. I'll make the data discrete, make it full view, and convert this into line. Is it looking good now?
Yes, it's looking much better now.
So this also, as you can see, it is very easy to make changes. Everything is in front of you. You can see if you want to make changes, you can convert from line to bar chart to area. You can do anything from here. So it's very easy to follow these things. So now let's do some analysis part. So now we have downloaded 3 script of data, 3 indices, Nifty, Bank Nifty, and India VIX. As all of us know, India VIX is the volatility index, and it's directly related to the Nifty. So let us see how both of them are totally related. For that, I just need to draw both of them together so that I can visualize and infer from the data. I don't want to get into too much of statistics and mathematical part. I'll try to do everything from visualization for the interest of the users and see whether we can come up with some idea or not.
Yeah, sounds good.
So I'm saying India VIX close. So I can see the close price here. I moved it here. Again, it has converted this into measure. I will convert it back to dimension. If you see closely, both of them look like mirror image to each other. Am I correct?
Yeah, they do. Yeah, they do.
So, but to understand it more better, I'll plot both of them together in the same plot. Okay,
so you just need to drag and paste any particular column that was there in the Excel onto the charting space, and the chart gets created. Okay.
Yeah, you can see that both of them are plotted in the same graph, but both are of the same color. So for
can you change the color?
To understand, I want to change the color to both of them. So I will do one thing. I will go to India close. I'll change the color to orange. Orange looks better. So now Nifty 50 is blue color. India VIX is orange color.
Okay.
What do you infer from this graph? What do you say?
So I think it looks mirror image to one another, and basically that might signify a negative correlation between the two indices. If
You
one
got it
goes up,
right.
yeah.
Yeah.
So for the benefit of our users, let me just quickly summarize what we are trying to do here. So we have run a script which downloads from a public library, Yahoo Finance, the data for 4 particular scripts. In the chart, you are seeing the data for 2 of those. One is Nifty Bank and the other is India VIX. Right, Sunil?
Absolutely. You summarize it very well. And as we can see, both of them are look like a mirror image of each other. That also in the opposite sense. It looks
And
like
this data is it would be for which period? I think it starts from 28th February 2022, this year only,
absolutely.
to yesterday's data, 27th May.
It is still today's data because we
Oh,
downloaded
very
the
nice,
data
very
just
nice.
now. It is
So we
still
are operating and dicing, slicing on a very recent data, last 4-5 months data.
only
Excellent.
2 months because as we discussed it covers, we can get the data only for last 2 months. So
Yes.
So as we have seen that it looks like whenever India VIX goes down, Nifty 50 goes up, and whenever Nifty India VIX goes up, Nifty 50 goes down. This is what I can infer from this data without understanding the statistics. If we see link it with the statistics part, then it is a negative correlation between two of them. So it looks they are highly negatively correlated. But this is on the price part. But when we have to develop the strategy, we need to develop the strategy on the returns part in percentage change. So we'll come to that. This is good for the analysis part.
Yes.
I will make a duplicate of this.
So now we are trying to do the charting of the same indices, but not for their closing prices, but for their daily returns.
Absolutely.
Got it.
So I will do one thing. What we need to do, we need to do buy and sell in the current candle of Nifty 50. So I'll do one thing first. NSCI close percentage change. I'll take this here. So this is how it looks like. But now, because I know I need to this is my hypothesis that this is negatively correlated with India VIX. So what I will do, I will take India VIX of the previous candle and just do this again. And because those are negatively correlated, I will just multiply it with -1. Is it correct?
Yeah. So you are basically multiplying the percentage changes of price for both Nifty and India VIX, and because they are negatively correlated, you're multiplying it with -1.
Yeah, but we are missing out something here, that we should not take the close percentage change of P1, India VIX previous candle. We should take the sign, mean only 1 or -1, whether it went up or went down. Because otherwise you will be multiplying with the percentage change of India VIX, so it will multiply the units there.
Got it. Absolutely.
So I will take the sign of this and I will press enter. So this came back again like this. I'll make it discrete. I will convert this line into the bar chart and I'll see how does it look like. It doesn't look so appealing to me that I can make a strategy on this. So let us check.
So can you just elaborate on what we are seeing right now? We are seeing the percentage changes in Nifty 50 for all the days in which India VIX went up or down, right?
Yeah. So what we are doing, this is 15 days of frequency data. So what we have done in here is whenever India VIX went down, in the next candle, we have taken the position in Nifty 50. in the opposite direction. That is, if it is going down, then we are taking the long position in the next candle of the Nifty 50. If we do like this, then this is what the returns will come.
Understood. And we are taking the sign of India VIX for the previous day, not the current day.
Yeah, that is 15 minutes of frequency data. So for India VIX, we are just checking the percentage change, the sign of the percentage change. We are not taking the exactly percentage change. So what we can do one more thing. I'll just copy this formula and I'll check the same thing in the previous second candle. Instead of previous candle, second last candle. So this also doesn't look so appealing to me. So I will try one more thing.
Okay, the chart for P2 is the upper one or the below one?
Sorry?
The chart when you multiply the second last candle of India VIX, that chart is the upper one or the lower one?
The lower one.
Okay.
So what I will do? I'll just check few other parameters which I have created there. So let us see whether it works only in the downtrend direction or not. Let us say whenever India VIX went up, then whether it works or not. Because the correlation is there. So it is still not working. So this is how we can do the analysis. I will try one more thing. I have defined one more simple moving average crossover. So I'll do one thing, India VIX. SMA. So I'm saying the SMA ratio direction in when SMA is uptrend. Because so far we were just checking the previous candle of the India VIX.
Right.
Now we will be checking the SMA. So I will just say the SMA of India VIX is uptrend. It seems it is working now.
Yeah.
So I will remove the second one. So when SMA ratio is 1, I'll show the filter here. So now the SMA ratio takes care of the longer duration of the India VIX. So when we are saying when it is uptrend, then we'll take the position into it. Then it is working. So
okay, so you have applied two filters. One says that the India VIX percentage change of yesterday should be positive, and the second filter says that the SMA of the India VIX should also be up in an uptrend. If both these conditions are satisfied, we take a long position in Nifty 50.
So what we can do, I think the previous condition is not required because we were just checking whether it works with that condition or not.
Okay.
I will just clear this filter. So it seems we need
strategy still looks good.
Yeah, it still looks good, but we'll just change it back to the previous one. So it seems whenever I will show the filter here. So the plan is that we have to see that how we can formulate the strategy or how we can come up with the strategy idea. So I will stop this part of the strategy here itself, and I expect the users or audience to explore more into it and see that what we can do with this, how to come up with
absolutely.
So this
guys, the idea behind this exercise is to give you a taste of the possibilities that are out there, using very open source libraries like Yahoo Finance, using very free resources like Tableau, and as Sunil very rightly showed you, two very standard filters, how you can apply them and see the results for yourself. You can, play around the code, play around the columns and data, and explore or extend these sorts of playground strategies for yourself. Right, Sunil?
Yeah, absolutely. I would like to add one more example here. So this is one example. I'll take the again visualization part itself here. I'll take Nifty 50 again. So what I will do, I will just copy the previous slide. That will be easy for us to do that. Just duplicate. So far we have added India VIX. So we have one more indices called Bank Nifty. Let's use it here, Bank Nifty instead of India VIX. As you can see, the orange one is in Bank Nifty and the blue one is Nifty 50. Can you infer something from this diagram, Salil?
Yeah, they look like they are moving in a very good tandem, in a very good sync. It seems like they have a very good positive correlation.
Yeah, absolutely. So like in the previous relationship, we have seen those are negatively correlated. This looks like these are positively correlated. From the visualization, it seems. But let us see how does it, whether it works or not. So I will use another slide here. I'll use NSCI. Again, I will be using the close percentage change of Nifty 50. I'm assuming that we will be using trading for Nifty 50 instead of Bank Nifty on the basis of Bank Nifty. So I will use So I will be using the previous candle of Nifty Bank. Again, I will use the sign here. Let me draw the cumulative percentage change here. It doesn't seem that it is the previous candle is positively correlated. So anyway, I think we should take some different approach here. So far, we have seen how that we were taking the momentum approach of in the previous strategy. Now let us work on the pair trading between Nifty and Bank Nifty. So what I will be using is, we have seen both of them are positively correlated. So if both of them are positively correlated, let us do the pair trading between two of them. So I will be using NSC close. NSC bank. I will take a ratio of both of them together. See how does it look like. So if we see, the ratio varies between from 2.06 to 2.18. So in the pair trading, what we have to do, we have to find out if there are two instruments which are positively or negatively correlated. then we need to take a trade between two of them together. Maybe we can buy one and sell another one. And whenever the ratio goes down, then we can buy. Whenever the ratio goes up, we can buy. So we have to buy the ratio of the two instruments. This is what we have to do. So in this particular case, if we are buying, then we must be buying 2 lots of Bank Nifty, and we are selling one lot of Nifty 50. And whenever we are going down, we are doing just the opposite of this. But the main problem is how to come up with the trading idea in this. I mean, when to buy, when to sell, how we'll get to know about that. So for this, we'll do one thing.
Sunil, just one small question on this. So the ratio itself is the closing price of Bank Nifty divided by the closing price of Nifty, right? For the same day?
Yeah, for the same day.
Got it. And we have plotted that the line chart for the same ratio over here. So whenever, let's say, Nifty, the ratio is between the prices or the percentage change. Can you repeat that?
On the prices.
Okay. So that's why it is not negative.
That's why it is not
understood.
negative. And the ratio is actually on, let us say, if the ratio is 2, for example, we can take the round of both of them. If it is 2, then it means for 2 lots of for 1 lot of Bank Nifty, we need to buy 2 lots of Nifty 50, like that.
Okay, that can also be the inference here. Okay, so the ratio would go up for 2 reasons. One is when the Bank Nifty closes at twice the pace at which Nifty 50 is closing.
Yeah, absolutely.
Understood. Okay, yeah, please continue.
So we'll do one thing. As we have seen that SMA ratio gives us the inference that in which direction the market is going. So we'll use the same thing here as well. So I will be using one indicator. I'm developing my own indicator now. So I will take the NSCI, SMA. We have defined the direction here, Nifty 50 SMA ratio direction. I mean, it gives us the direction of Nifty 50 where it is going. So I will use this to create one more function. So like you can see, we can use a function also here. Pair trading. So what I will do, I'm saying if is equal to 1, mean it is positive direction. And let us say when both of them are in the positive direction, then what happens? NSC, bank, SMA ratio. If both are positive direction, uptrend, then I would say this ratio will also be uptrend. Then I will pass 1. And else if both are -1, then -1. If the condition doesn't meet either of this, then 0. And does it look good?
Yes, it does.
Yeah.
So if both the directions are positive, you return 1. If both are going down, you return -1, otherwise 0.
So now accordingly, we'll trade in this pair trading. Let us see whether it works or not. So we have defined the function called pair trading. I'll just move it here.
Yeah, for some users who are asking which platform is Sunil using, this is Tableau. You can download it from the internet, and Tableau is basically a good tool for creating charts and the data visualization aspect. Yeah.
Absolutely. So now, as we have seen that it is showing the signals when we have to buy, when we have to sell this ratio, this pair trading ratio. So again, we'll do the same thing. We'll try to move it in both of them in the same chart. First, I will convert this into dimension. Yeah, it plotted both of them together, but actually it is not visible to us that whether it's working or not. What we will do, we will make first of all the signals in orange and the plot in blue, and after that we'll just shorten the time frame so that we can understand it better. I'm just taking 1 week of data as of now. The latest data. Does it look better now?
Yes, it does. Yes, it does, Sunil.
So let us see whether it is working properly or not. So here the ratio is down. So whenever the ratio goes down, we have to buy. So it is showing the buying signal here. It is going up. So here these are the signals -1, 0, 1. So here we have to buy.
So let's say we are receiving a -1 signal at 13th May 2022, right, around 1:30 p.m. Is that correct?
So okay, when it is going up, means it is a buy signal. When it is going down, it means it is sell signal. This is how we have.
Okay, so currently the signal which you are seeing on 16th May 11 a.m. it is -1.
It is -1.
So and basically that is a short position on Nifty.
Short position of the ratio of the Nifty, Bank Nifty and Bank Nifty.
Got it.
We can see maybe little smaller time period to understand it better. So let us see, like we can see the ratio went down here. So we took the buy position because it went up here. And as soon as the ratio went up, it is saying it has to come out of the position. It is saying the signal is 0. So we have to come out of the position whenever it is 0 or maybe the opposite direction. So it came to 0. We have to come out of the position. Again, it went down here. So it is saying the buy position. So it seems it is working here.
The signal 0 basically means you are squaring off the earlier position, or?
Yeah. We have to square off the earlier position either whenever it comes to 0 or whenever it is the opposite direction. If we are on the buy side, then we have to square off when from 1 to 0, if it comes to 0 or comes to -1.
Got it.
So it looks like it is working. Let us see the same thing in the different time frames. One more time frame. I'm moving the period. Do you think it is working in this scenario as well?
Yeah. Okay. So whenever the ratio comes down, it takes the -1 signal. And if the SMA ratio or the ratio of bank and Nifty is going up, it takes a positive signal.
Yeah, you're right. So that's all from here. So if there are any questions, we can take them up.
The questions are mostly about the platforms that you're using and the earlier IDE platform which you were using. Viewers would like some knowledge on that.
Yeah, the people who are familiar with Python, they can understand that this is a popular Python IDE called Spider. So many people who use Python, they use this. There's multiple IDs are available in Python. You can use any of them, but I'm using this one. This is my favorite. That is Spider.
Got it. Got it. And so, Sunil, in this particular session, we tried downloading these four major or very liquid scripts like Bank Nifty and Nifty. So similarly, we can download a lot more indices, do the same analysis on different securities out there in the Indian markets, right?
Absolutely. Whether Indian market or US market also it supports. Another thing is, like the main part about this is we wanted to see from the raw data how we can infer the information and how we can come up with the trading strategy and idea that we could do just because of that. And we use some analytical tool called Tableau, which is helping us in coming up with some solution for this thing.
Got it. So what I take away from this session is the process of generating a trading idea. You download certain indices, then you use certain charting platforms to say what hypothesis or what sort of a trading theory is the data pointing out to. So like we started off very early downloading India VIX and Nifty data. And because they looked like mirror images to each other, yes, this very chart, because it looked like a mirror image of each other, we could come up with this idea or hypothesis, as you call it, that maybe they are negatively correlated, and maybe if one goes down, the other goes up, and I can take a long short position basis that. So then we proceeded to check if the signals generated using our very hypothesis works or not. And we came to this particular chart, which is basically you're applying an SMA filter, right? If the trend of India VIX is up, then you take a good position on Nifty.
Yeah.
And then we moved on to a different idea where we are comparing Nifty versus Nifty Bank. And we're saying because they are moving in tandem to each other, because they are very positively related, yes, this very chart, it gives us a hypothesis or an idea that maybe I can take a long short basis, the ratio that I'm going to calculate on this and generate signals from it.
Yeah.
So likewise, what my essential takeaway from this is one should play around with the data, visualize it, and see from a very naked eye perspective what sort of ideas are coming into his mind, and then do a very rigorous charting and the backtesting aspect to it.
Yeah, you understood it very well, and you have summarized it very well, Salil. So this was the purpose, and I would like to mention one more thing: the couple of strategies which we have developed here. So don't take them as a strategies itself and don't apply them. I'm referring to the audience. So these are required to be thoroughly tested, thoroughly back tested. Then only you can think of that. But don't consider them as a trading strategy itself. This is just
absolutely.
We are just trying to infer from the data. So we are not sure whether this will work or not.
So anyways, this is just the first leg of the entire flow, right? We have, even if we come up with a trading idea, even if we generate a thesis and try to test it on charts, we anyways have to do back testing and then do paper trading, and then probably afterwards we go live. It's an entire process, right?
Absolutely.
So yeah, understood. Somebody is asking us, what is the best free source of data? So maybe I can take this one. So as addressed in the previous session as well, there are a lot many vendors out there from where you can get your data. Yahoo Finance is a open source library which allows you to fetch data. But obviously, open source libraries have some constraints and conditions, like you can only download the past 60 days of data. Am I right, Sunil?
Absolutely.
Otherwise, you also have certain trading APIs like Breeze, where you can also download the data from. So yeah, feel free to check out our trading APIs or the open source data vendors. And also, yeah, I might add, it depends upon what sort of data are you really looking forward to. Like Sunil earlier in this presentation said that there are many broad 4 categories of data: micro, macro. So if you're looking for a macroeconomic data, maybe you should go to a different vendor. And if you're looking for a market microstructure, you can probably go to Yahoo Finance and libraries like that.
Exactly.
Yeah, folks are asking if we can provide them links for the data. So as we showed in the Python script, these are open source libraries. If you have integrated development environment, IDE like Spider, which is shown on the screen. So there are many development environments like Jupyter, Spider, Visual Studio, where you can just need to run this import function yfinance as yf line number 9, and you're good to go. You can use their methods to download the data.
So from here we can download the data with just single line.
Yeah. Looks good. So folks are asking if we can provide some vendor names, data vendor names. So like I'm reiterating this again. So if you are fetching data from a library, Yahoo Finance is a good one. InvestPy is another one. If you're looking for Indian brokers, then you can check out the trading API from ICICI, which we call Breeze. And the links can be circulated to that over mail to you guys. You just need to go to Google, just type Breeze Trading API, and I'm very sure it will direct you to our homepage, landing page. So yeah, people are wanting to know the entire process of deploying the strategies. So I guess all the detailed execution from the this very session, which is covering the generation of the trading idea, to the last mile, which is the deployment. I mean, you just have to watch the same space, and we'll be covering up all the legs of how to develop your strategy as part of this webinar program. So please stay in tune.
Yeah.
And so I guess we've addressed most of the questions, Sunil. I would just like to thank you so much for your time, and I believe this was a very, very enriching and learning experience for all of us.
Yeah, and thanks a lot, Salil, for giving the briefing about that and summarizing all the points. And I thank you all the audience, and I would request to join the remaining sessions also to understand. I'm sure that next sessions will be much more interesting than this one. So stay tuned, like Salil said. We'll be learning a lot in the next few sessions.
All right, Sunil. Thank you.
Thanks.
And thanks everyone. Good evening, and let's connect next week again in the same space. Thank you, guys.